Just wanted to do a quick example of using the profile overnight versus day trading. Friday we had a big sell-off, but we were saying all day Friday that you probably could buy that 43.60 area with a stop below, say 43.20, so risking about 1%. And you'd probably be looking for a move to 44.17 is where we were targeting on Friday. So here we are Monday morning. If you bought that and held it over the weekend, yes, you had over weekend risk, but the stop was 1% lower. So if we gap down 1%, that's where you'd be stopped out. The reason I bring up this idea, swing trading on the profile versus day trading, most of the time the market is going to do what it's going to do when it wants to do it, and that's the key thing. And I don't really worry about when it's going to do it. I just take the opportunities as they come to me. So when a market moved up sharply like it did and then sold off the next day and held all day on Friday, Friday would be the day, especially on expiration, that it would roll over and go lower. I was very comfortable taking it along, knowing that we were well below value and probably going to trade up. So today, if you waited, the best price you could have got after the open is 44.15. Now, there's nothing wrong with 20 points to the upside, 17 points right now if you got the lowest price. But really, the opening range in the 5-minute bar was 15 to 23. So again, that's the low print. But if you got the low print at 15, the best you've been able to do is 20 points. On the other hand, if you bought 44.60 and are still holding, you're looking at a 72-point swing. I'm basically just waiting to get stopped out now. So value is now below us, 44.15. We've gone above to the high end of the histogram, and potentially, again, I'd look to sell it up here at 54, and then just keep moving stops lower below you. So just want to point that out, that sometimes people get caught up in the whole, the overnight. But you got to look at it with context. Market couldn't break on Friday. It's a good place to get long into a weekend, especially on expiration. It was quad wedging. There was a lot of weird things going on at the end of this last week. Brexit this week. People were afraid over the weekend. Again, a good time to buy when everybody else is selling. So I just point this out to make a point that day trading is difficult. It's very hard. It's much easier to give yourself an opportunity by looking at the profile on a longer-term chart and waiting for the setups to come to you. So that setup Friday was fantastic. It's a good example of, again, let's just say you bought the top here on the open at 23. You've only got 10 points of profit versus 70. It's a big difference, and it's a huge difference to your portfolio. Why not trade the setups, forget about, and if you're not capitalized, then day trading could be your only option, but you're giving up a big chunk of opportunity. Save your money, get well capitalized, and take the trades as they come on the time frames that you want to behave upon. It's the best way to make money using the profile.